next thing we're going to do is to do some more posting. So we want to first of all make sure we're in balance. So we look at our trial balance and we can see, yes, we are. And then we go to the posting. And this particular one, we're going to show how to pay off the monthly portion of our note payable. So we click on cash, and then we're going to write a check out to pay for the note. This will go to the VEC. Total amount of the note for the things that we purchased is listed there in the credit posting column. Go ahead and click calculate and post. Another one, yes. Now, the accounts that are affected on here is the note payable. So we click on note payable. Now, not all of the full amount that we just wrote the check for goes toward the principal of the note. A portion of it does, and this can be found in that note calculator located in the accounting lesson. So the first part went to reducing the note. The next part is interest, and so we click on interest expense, and we put in the amount of interest expense. Again, this loan calculator would show you what those numbers are based on how much you borrowed and for what length of time the loan was for. Now let's check and see if we're still in balance. Trial balance tab, see the trial balance. As you can see, we still are in balance at $235,144.46. Now the next account we had a little more posting to do. Click on posting again, and this is going to be for our depreciation expense. So we click on find depreciation expense. Depreciation is a way of taking the value of the asset down and calling it expense. So it reduces your income taxes. It's not an out-of-pocket expense, but it really helps reduce the amount of taxes that you need to pay. So our depreciation expense was calculated at $491.12, and then we say, yeah, we got more to post. And now we have to post to these, what are they called, contra asset accounts. One is accumulated depreciation for furniture, so we click here. And this will show, at least on paper-wise, that the asset is reduced in value because we've used up a portion of it. That's what depreciation expense is all about. So we're going to credit this one. This part of the depreciation expense is $116.12. And we say calculate, yeah. Another one, yes. And then we have to pick up the equipment part of the depreciation. So we click there, and we click in the credit posting box, and we put the amount of money that should go there. Calculate and post, and then let's see if we're still in balance again. And yes, in fact, we are in balance at $235,635.58. The next thing we're going to do is to post all of our company's expenses. VE gives a list of standard expenses that every company needs to pay. So we'll go ahead and go to the posting part of the program. Click on the tab, then see accounts, and we'll take a look at all. Now what we want to do is we're going to write a check out for the full amount of all of our expenses. So the credit posting is to cash, and we put in the amount of, right here as you can see, $9,925, and then we post that. Now let's see what makes up that $9,000. These will be our different expenses. So VE has us paying, one of the major expenses is rent, so we find our rent expense. Click on rent expense. You'll notice it appears in the box where it says account to be posted. We put in the amount of $3,500. Calculate post. More postings, yes. Now our next one we're looking for is repairs expense. So down here we find repairs expense. These are income statement accounts, and you'll see how that works in a little bit. So you click on repairs expense. You put the amount of the debit in the debit posting box, and it's $50. Calculate post, yes. Another one to post. Now we're looking for alteration expenses. This one's particularly suited to the kind of company that we have here, Bromley's. It's a menswear, and there's alterations on suits and things like that need to be done. And it becomes a pretty large expense. It can either be done in-house or have a tailor in-house, or take it to a tailoring company to have the arms and lengths shortened on the suits. So we put that one in. And then we've done some internet advertising, so we want to find our advertising expense. So scroll down, find advertising expense, and put the amount in. And we spent $2,000 on advertising this month. to attract customers to our site. We'll put that one in. We bought some supplies, so now we have to find supplies expense. And click on supplies expense. It puts it up in the account to be posted box. Make sure it goes up there. Sometimes you miss it. If you don't click right, it doesn't go in all the way. So make sure when you're posting that it always says account to be posted. It shows you there. So it's 150. Posting, yes. Another account, yes. All VE companies have to have insurance. So we find our insurance expense. We click there. And we put the amount of the posting for insurance expense in the debit column, $750. Calculate post, yes. Additional postings, yeah, we got a couple more to do. One is our miscellaneous expense. That's one that doesn't seem to fall in any of the other categories. You can always use that, but you don't want to put large amounts of money into miscellaneous expense because then you don't know where the money really went. So put that one in. Click yes. We have one more, and that's our utilities. That's like telephone and utility, electricity, and so on and so forth. And those are tell you in the tutorial how to calculate your utilities expense. It's based on the number of people in your class. So we put the amount in here. In our case, it was $1,875 post. And now let's see if we're in balance. Trial balance. And there we go. It's at $235,635.58. So you can see we're in balance. You want to do this trial balance after these major transactions to make sure you have everything in balance.